Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Bob Johnson, co-founder, chairman, and CEO of Economic Index Associates, as well as John Molesphini, Global Head of Institutional Nasdaq Indexes at Nasdaq Investment Intelligence, to discuss the IFED model and how it is applied to indexing. John and Bob, it's great to see you as always. And Bob, I'd like to start off with you. Tell us about the Nasdaq IFEDL index and how that index has performed to date.
I'm really happy to be back on Trade Talks, celebrating the 3-year anniversary of the launch of the Nasdaq IFEDL index. My colleagues at Economic Index Associates and I developed the IFED model that uses Federal Reserve monetary policy signals and key firm metrics to select portfolios positioned to benefit from existing market conditions. Now, the underlying premise is that firms with different firm-specific characteristics, for example, debt ratios or cash balances, perform markedly differently when the Fed is pursuing an expansive or restrictive monetary policy. Our IFED indexes are active, replicable, investable, rules-based, and transparent, and are based upon our peer-reviewed academic research that we've performed over the past 30 years on the association between Fed monetary policy and capital market returns. Our large capitalization Nasdaq IFEDL index has performed phenomenally well since it was launched, returning 58.5% over the last 3 years, representing an average annual alpha of 4.9% when benchmarked against the S&P 500. We're very proud of the performance of the index, particularly considering that the period examined includes both a market environment following the pandemic, characterized by unprecedented expansive monetary policy, and the more recent extremely restrictive monetary environment. The IFED methodology is truly an all-weather strategy.
Bob, tell us a little bit more about the index. How does your model form a portfolio of stocks?
Sure. As I noted earlier, the IFED methodology is research-based, and it's a combination of a top-down and a bottom-up approach. The top-down aspect is that we utilize a model that employs Federal Reserve monetary policy signals to define the market environment as expansive, restrictive, or indeterminate. Once we've determined the market environment, we use a bottom-up approach to select stocks that are best positioned to thrive in that environment. We rank firms to determine an IFED score based upon 12 firm-specific metrics. In the case of our IFEDL index, the 75 stocks with the highest scores selected from a universe of the 500 largest stocks comprise the index. And here's an important aspect of our index. The stock weighting in the index is also based upon the IFED score. So the firms with the highest scores receive the highest weightings.
What other indexes have you launched with Nasdaq, and will you be launching any others in the near future?
Yeah, the IFED methodology is very robust and can be applied to virtually any universe of securities. For example, any market capitalization segment, or can be applied as an overlay to any starting universe of securities. For instance, firms that have passed ESG screens. We're very pleased with our partnership with Nasdaq, and we have launched 2 other indexes as a result of the partnership. The first is the IFED Low Volatility Index, and the second is the IFED 4% Target Volatility Index. Soon, we anticipate launching indexes based upon different market capitalization segments, such as a small cap, mid cap, and mid-large cap index.
John, for Nasdaq and our clients, can you share why we were interested in partnering with Economic Index Associates?
Sure, and great to be visiting with you here today. So from the perspective of our Nasdaq Index team, we are known for having unique and innovative index solutions that we bring to market with our partners. Some of them are ideas that we work on from a manager-partner perspective, so they provide ideas to us, and others are derived from our own research, as well as introductions to firms that have unique IP or data that can provide a differentiated approach to security selection. This allows us as Nasdaq Indexes for our expertise to shine and to be utilized to construct a portfolio that is new, meets performance expectations, and will attract investors. That's why we are thrilled to be partnered with Economic Index Associates and Bob and his team on this series of Nasdaq IFED indexes. As Bob mentioned, the team at EIA focused on academic research designed around how investing returns could be impacted by Fed policy signals. So the research kind of took place before an investment. It was only after continuous industry pressure to share their analysis as an investment strategy did they decide to formally document the methodology and launch the indexes. And Nasdaq and our clients are looking forward to bringing them to market. The EIA team, their research, and the indexes are truly one of a kind.
John, what do we think the market demand for the IFED indexes will be?
Great question, and love to answer it. Short answer, we think demand will be great, and we already have interest from retail and institutional investors. As we talk here today to celebrate the 3-year live track record anniversary of the IFED Large Cap Index, we are excited about the various ways we can make this index and others still to come in the IFED suite available to a broad audience of both retail and institutional investors. We believe the unique and innovative approach to security selection is a true differentiator versus kind of the standard industry benchmarks and more active portfolios. Look, we know retail investors and their advisors desire easy to understand investment strategies that they can implement. The markets are obviously very aware of inflation these days, and Fed policy and trends are a constant newsmaker that clearly impacts the markets and their investment portfolios. For institutional investors, we recognize the tug of war taking place between active and passive, the fee pressures that they are under, the balance of risk versus reward, and the desire for greater transparency. And we think the IFED indexes firmly sit in the middle as a great addition and complement as an index. Lastly, the investment methodology behind the IFED indexes is transparent while remaining constant and can all be traced back to those citations of published academic research. As Bob mentioned, by positioning the index holdings and repositioning them to align with changing market conditions, the large cap index specifically has outperformed many other large cap indexes over a challenging market environment.
John, what's special about the 3-year anniversary of a live track record?
Sure. So for retail investors and their advisors, they often want to compare investment options to others. So the longer track record obviously helps with their analysis. More formally, many of the RIAs, retail platforms, and wirehouses have due diligence requirements or thresholds that often require a 3-year track record in order to be rated and appropriately recommended to their clients. The same often applies for institutional investors and their advisory consultants. So having this 3-year track record not only passes those screens, but given the outperformance the IFED Large Cap Index has achieved over that time period, we are obviously very excited for those comparisons to start taking place. Specific to the timing and celebration of this 3-year anniversary on the Large Cap Index, it has been the best performing large cap equity index since June 9th of 2020 when compared to other more well-known industry large cap beta indexes.
John and Bob, this sounds like the start of an exciting partnership around a suite of IFED indexes. Any last thoughts for us?
No, we're
Thanks,
just,
Jill. Go ahead, Bob.
no, EIA is just thrilled to be associated with Nasdaq in partnership with Nasdaq, and there's a bright future for the IFED indexes.
And echoing that, thanks, Jill. For institutional and retail investors, Nasdaq thinks that the truly unique investing approach brought by EIA, aligned with the great risk-adjusted returns that have been achieved, will cause many of them to consider the IFED indexes a positive new entrant to the investment allocation discussions going forward. And we're excited to be working with Bob and the team at EIA, and we'd like to congratulate them on their success so far. Thanks for having us on today.
You got it. John and Bob, great to have you on as always. Thanks for joining us and congratulations again on the 3-year anniversary. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.